U.S. stock market surges on tariff optimism, understanding the rally. On March 24, 2025, the U.S. stock market experienced a significant surge, with major indices posting substantial gains. The Dow Jones Industrial Average jumped 500 points, while the S&P 500 Nasdaq Composite rose by 1.5% and 1.8% respectively. This rally was primarily driven by optimism surrounding President Donald Trump's remarks about potential flexibility in upcoming tariffs. Investors welcomed reports suggesting that the administration might adopt a more targeted approach, excluding certain sectors and countries from the tariffs set to take effect on April 2. Background: the tariff saga. The U.S. has been embroiled in a complex trade environment, with tariffs playing a central role in shaping economic policies. President Trump's administration has been actively engaged in trade negotiations with key partners, including China, Mexico, and Canada. The imposition of tariffs has been a contentious issue, with concerns about their impact on inflation, consumer spending, and overall economic growth. In recent weeks, financial markets have experienced significant volatility as traders grappled with the potential consequences of these tariffs. The uncertainty surrounding the scope and severity of the tariffs has led to fluctuations in stock prices, with investors seeking clarity on how these policies might affect different sectors. The optimism factor. The recent optimism in the stock market stems from reports indicating that the Trump administration may soften its stance on tariffs. This shift in policy is seen as a positive development, as it could mitigate the potential economic disruptions associated with broad-based tariffs. The possibility that certain industries, such as automobiles and pharmaceuticals, might be spared from tariffs has particularly buoyed investor sentiment. Technology stocks were among the biggest winners in this rally, with companies like Tesla and Nvidia leading the charge. Tesla's shares surged by 7.8% following news that the automotive sector might be exempt from tariffs, while Nvidia climbed by 2%. This performance highlights the significant impact of tariff policies on specific sectors and the broader market. Market dynamics and investor sentiment. The surge in stock prices reflects a broader shift in investor sentiment. As concerns about tariffs begin to subside, investors are becoming more optimistic about the economic outlook. The yield on the 10-year Treasury note rose to 4.3%, signaling increased confidence in economic growth and a willingness to take on riskier assets. However, analysts caution that this optimism should be tempered with caution. The unpredictability of President Trump's policies and the ongoing volatility in global markets mean that investors must remain vigilant. Economic data releases, such as the Purchasing Managers' Index, PMI, will be closely watched for signs of resilience in the U.S. economy. Sector performance. The rally was not limited to technology stocks. Other sectors also benefited from the improved market sentiment. The travel and leisure sector saw gains, with shares of British Airways parent company, EAG, rising by 0.9% after the reopening of Heathrow Airport. This recovery in travel-related stocks underscores the interconnected nature of economic sectors and how policy changes can have far-reaching impacts. Global market impact. The U.S. stock market's performance has implications beyond its borders. The Toronto Stock Exchange, TSX, hit a 3-week high on reports of a softer U.S. stance on tariffs, reflecting the interconnectedness of global markets. This reaction highlights how trade policies in one country can influence economic conditions and investor confidence worldwide. Conclusion. The recent surge in the U.S. stock market is a testament to the power of policy announcements in shaping investor sentiment. As the global economy navigates complex trade dynamics, the flexibility shown by the Trump administration on tariffs has provided a much-needed boost to market optimism. However, ongoing uncertainties and the potential for future policy shifts mean that investors must remain cautious and adaptable in their strategies. In summary, the U.S. stock market's rally on March 24, 2025, was driven by optimism surrounding a potentially more targeted approach to tariffs. This development has eased concerns about economic disruptions and boosted investor confidence, leading to significant gains across major indices. As the market continues to evolve, it will be crucial to monitor policy developments and economic indicators to understand the trajectory of this optimism and its implications for global markets.